We take a historic composite of all the cycles going back 50 years and we slap them together. And what that tells us is that the Fed should pause right now. It should last 7 months. The recession begins somewhere around the beginning of November. S&P bottoms somewhere in, say, December, and earnings bottom somewhere in February. The recession ends May of 2024. That's the historic timeline. I think that's not what I think is going to happen. That's where we use that as a jumping off point into our 23 outlook. What I think is going to happen is the Fed is going to keep raising rates into March. March is probably the last time they'll raise rates. Let's say 5% on the funds rate is the upper bound is where we'll be. And then
you think they'll do 25.
Yeah, I think so. I think the inflation data is going to be extremely it's going to be disinflationary, and it's going to be pretty strong signal. But I believe the Fed is still trying to loosen or tighten financial conditions. And so every time, that's the problem. That's why we've been saying the market's range bound, because you get this good inflation data that's going to keep the market bid, and the Fed's going to try and knock it down. Eventually, they're going to hand that baton off to the earnings concern. So once the earnings concern gets pulled into view, that's when I think the market cracks to the downside. But for now, and through really the first half of 23, I think we're going to be roughly range bound, fighting between this push and pull. The Fed's going to pause in March. And if you look back historically, the market has rallied in every single pause phase, except for 2000. Bonds rally every single pause phase. Commodities rally every single pause phase. So the bottom line for me is that we're going to have, everyone's very bearish for the beginning of 23. I think we're going to be much more range bound. We're going to get a short rally when the Fed pauses. That's not going to last nearly as long as a typical pause rally. And I think the pause will be short too, because I think the economy starts weakening. We get a recession in the second half of the year. The market probably bottoms somewhere in the second half of the year. My best guess, when you look at historic comparisons, would be something around 3,300 gets you to your ultimate low next year.